Welcome back to Pro News Weekly. This week, it's a market in a holding pattern, and all eyes are on what comes next.
That's it exactly. The US dollar and the stock indices are stable, gold is struggling to get going, and Bitcoin is waiting on earnings.
Lots to get through. Let's start with the dollar.
So the dollar is showing mixed signals. Brent has rallied nearly 40% from its July low, and that has increased the risk of faster inflation in the US. As a result, the odds of 2 Fed rate hikes in 2026 have jumped over the past week from 30% to 57%. The chance of a hike next month alone has gone from 12% to 34%. That spurred a rally in Treasury yields, though the dollar index was a bit too shy to rise this time.
So if yields are up but the dollar isn't, what's holding it back?
The strength of its rivals mainly. Verbal interventions by the Japanese government are curbing the bullish momentum on the yen. Expectations of hawkish rhetoric from the European Central Bank are helping the euro. And a calmer political picture in the UK is supporting the pound.
On to equities. The S&P 500 is still in a consolidation phase, and it's continuing to ignore both geopolitics and the growing likelihood of Fed tightening. The whole focus is on second quarter earnings. The big question is whether those fears that the massive spending on artificial intelligence isn't paying off will finally be confirmed.
And expectations going in are high, aren't they?
Very. Wall Street is expecting a 26% rise in profits for S&P 500 companies, one of the strongest figures outside a post-recession recovery. All 11 sectors are forecast to show a profit increase, which hasn't happened since 2021. And it's not just artificial intelligence driving it, it's also the recovery of non-AI companies as the tariff fears recede.
Let's move on to gold. The bulls are looking weak. Its failed attempts to hold above $4,100 an ounce really tell the story. The world's leading central banks, led by the Fed, are planning to raise interest rates to fight inflation. That has taken the air out of the debasement trade. A strong dollar and rising Treasury yields make for an unfavorable backdrop. In addition to fears that Gulf states could sell bullion during the Middle East conflict, any gains look likely to be short-lived.
Though it did manage a bounce, didn't it?
It did, and a 2-day rally with oil prices rising like wildfire seems unusual. The most likely explanation is profit-taking on short positions, once the bears couldn't hold that key $4,000 an ounce level.
Over to Bitcoin, which couldn't break above 67,000, as the hopes of strong corporate earnings pulled demand towards big tech. The recent rebound in Bitcoin was really driven by a rotation, with capital moving out of the sector. Those funds found a safe haven in crypto exchange-traded funds.
And there's a striking call on strategy this week.
There is. Wall Street is exceptionally bullish, expecting Michael Saylor's company to see its shares increase 170% over 12 months, better than any other NASDAQ 100 constituent. And that optimism rests on confidence that Bitcoin recovers. So what's the main event to watch?
The key one in the week leading up to the 31st of July is the FOMC meeting. Chicago Mercantile Exchange derivatives put a 65% probability on rates remaining unchanged and a 35% probability of a hike. There hasn't been a gap that wide since September 2024, and it comes down to Kevin Warsh and his reluctance to commit to a direction. The message for markets is to be ready for tightening at any moment.
Anything else on the radar?
Plenty. Investors will keep watching the Middle East and weigh up the tariff outlook. They will also keep an eye on European inflation, U.S. gross domestic product, as well as the meetings of the Bank of England and the Bank of Japan.
That's it for this episode. Stay on top of global market moves with Pro News Weekly.
Like, share, and subscribe, and we'll see you next week.